This letter is for all Tesla stock investors and it is signed by Elon Musk. You will want to pay attention because this is going to be very important. It is also signed by the chair of the Tesla board. It contains important proposals to be discussed at the next annual meeting of stockholders, which will be held on Tuesday, on May 16th at 3 p.m. Central Time. And here are the three big things that you need to absolutely pay attention to. Number one is a proposal right here, a stockholder proposal regarding reporting on key person risk if properly presented. Many Tesla stock investors are worried what would happen to Tesla stock if Elon, let's say, was involved in an accident and suddenly passed away. Investors want to hear about that. However, Elon Musk and the board recommend to vote against this, meaning the board would not reveal what is the succession plan if there even is one. We do know, actually, there is a succession plan. We'll talk about that in detail in a bit. And number two item here is a Tesla proposal to approve executive compensation on a non-binding advisory basis, as well as number three, which is really the same item, a Tesla proposal to approve the frequency of future votes on executive compensation on a non-binding advisory basis. One thing really, just different parts of the same thing. But why wouldn't the board want us to know exactly what the succession plan is? Tesla board actually has a very good response to this, and we'll go through all of this together here. This proposal comes from a Tesla stock investor from Iceland, actually. According to a 2018 Morgan Stanley report, in 2017, 59 S&P 500 CEOs left their companies, and specifically, they are talking about the 500 largest companies in the US. 59 of these CEOs left. And these companies then underperformed the market by 11% in the subsequent 12 months. Loss of a key person can be due to decisions from the key person to part with the company to part with the key person, or outside factors such as untimely death or disability. And all of these are rarely easy to foresee long in advance, and that is why a lot of Tesla stock investors have been worried. It provides an action plan of what should be done. Identify key persons, number one. Number two, document processes and procedures for their succession. Number three, spread the knowledge, cross-train successors. Number four, manage communications with stakeholders. And number five, financial mitigation of key person loss impacts. It continues here. At present, Tesla shareholders can have little confidence that said risk has been at all ameliorated, in other words, improved. Tesla specifically cites as a risk in its Q3 10Q. We are highly dependent on the services of Elon Musk, the techno king of Tesla and our chief executive officer, offering no explanation of how it plans to deal with said risk. We asked the board to present to shareholders a clear and unambiguous key person risk amelioration strategy documenting that all of the above 5 points have been met so that shareholders can be confident that the company will have qualified successors in mind who are prepared to lead the company to success in the event of a key person departure. Well, that seems to make sense, right? Even Tesla acknowledges there is certainly a risk. What could possibly the board and Elon Musk say to change investors' minds? Well, actually, they have a pretty good point here. Check this out. The board has considered this proposal and determined that it would be detrimental to the interests of Tesla and our stockholders. Contrary to the proponents' claims, Tesla does recognize that recruiting and retaining a highly talented and experienced management team, not just the CEO, is critical to Tesla's success. The board and the management of Tesla are best equipped to carry out succession planning, as well as to handle day-to-day hiring, promotion, and termination decisions. Such decisions take into consideration numerous criteria that are continually adapted to meet the evolving demands of Tesla as determined by the board and the management. Adopting this proposal would cause unnecessary competitive harm to Tesla and undermine our efforts to recruit and retain management. The disclosures requested by the stockholder proponent, such as identification of key persons and the amelioration of a potential loss, would lead to potential disclosure of confidential and sensitive information such as our business strategy and outlook, our most promising internal candidates, any desirable external candidates, and other factors that our board currently considers in the succession planning process. By publicly naming key persons and disclosing mitigation action plans, the proposal invites our competitors to target and recruit high-value executives away from Tesla, and we don't want that, including those who may be identified as potential successors as part of succession planning. Furthermore, executives who are not identified as key persons or potential successors may choose to voluntarily leave Tesla and may create unwelcome tensions amongst the management team. Ooh, Tesla just dropped a bomb here. And it continues. Additionally, the board already devotes significant time to leadership development efforts and implements several of the procedures discussed by the proponent above. Through regular discussions in meetings and executive sessions at both the board and committee level, the board follows certain processes regarding the evaluation of management positions. Furthermore, the compensation committee provides guidance for and reviews and approves key leadership hiring and development retention plans to manage and mitigate the loss of any key persons. Are you starting to see the point on why it may not be a good idea to actually go ahead and identify the successor publicly? And then it continues here further. Our directors also regularly communicate and engage with management talent and potential successors to management positions in meetings held throughout the year, as well as through informal events and interactions, allowing them to further identify and provide exposure to qualified successors. From an external standpoint, during Tesla's Investor Day held in March 2023, we provided our stockholders additional visibility into our management team. As a result, this proposal, if adopted, would constrain the ability of the board and management to effectively oversee and manage succession planning, day-to-day hiring, promotion, and termination decisions that require consideration of numerous criteria that are continually adapted to meet the ever-evolving demands of a company as dynamic as Tesla. In light of the foregoing, we believe the proposal would be detrimental to the interests of Tesla and our stockholders, and I fully 100% agree with that. Imagine being Andrew Baglino or Tom Zhu or the CFO of Tesla, Zach, and you're thinking, maybe there's a chance one day I will be the CEO of Tesla. Maybe one day, probably not, but maybe one day. And if there is that possibility, you know what? I'm going to stay and I'm just going to work a little bit harder. And now they tell you, no, definitely you will not be the successor. Absolutely 100%. You are not even considered here. Do you think they would work a little bit less hard? And then even more, do you think there would be conflicts? Let's say there's someone that technically does not rank as high as Andrew Baglino, and that person is considered to be a successor for the CEO position. How do you think that dynamic would work out? I don't think it would be great. And if a successor is picked from outside the company, how do you think it would make all of the insiders feel? It's like, they are not even considering us. But the most important thing is to remember that the board already has a succession plan. We don't really need to know about it. As long as you trust the company, if you do, then we don't need to know about it. Now, if you do not trust the company, then of course you would want to know about it. But I generally trust that the decisions that the Tesla team makes are generally good decisions. And I don't want extra tensions within Tesla that would keep Tesla from achieving its mission and getting to 20 million deliveries per year eventually, solving full self-driving, expanding into energy storage. I don't want corporate politics to get in the way of that. We don't need to slow ourselves down just to boost the stock price temporarily. I'm a long-term investor. I prefer long-term gains, even if that means potential short-term pains. The next important thing is the Tesla proposal for non-binding advisory vote on executive compensation, meaning this would allow the board to present compensation ideas which would not be binding yet. And of course, for that, I would vote yes. I mean, it's not binding. We have nothing to lose really here. And if you don't like it, then we can vote against it later, I think. So, yeah, certainly, yes, I would vote for that. And it's specifically for a few executives only. And these executives would be Elon Musk, of course. It would be the CFO, and it would also be Andrew Baglino. You can pause at any time here if you'd like to read a little bit more. It's a lot of stuff that doesn't really matter, but this is the list. So as you can see, only Elon, Zachary, and Andrew. I might make a separate video about this because this is a lot of information, but I don't see any problems with just creating a potential compensation plan that would not be binding yet. I see no problem at all. So of course, I will vote yes for that. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.